Hello, everybody. Welcome to today's trading podcast. It's the 14th of September 2020. My name is Adrian Boothie. I'm the head of trading here at Trend Signal. And today we're going to be talking about, well, what's been going on with the Forex and stock markets in our usual Monday podcast. FTSE strong as the hard Brexit risks increase is going to be one of the main topics of today as we really run through what's happening in the Forex stock and commodity markets over the last few days. Joined as ever with Jerry Miller. Hi, Jerry.
Hi there. Morning all.
And Jerry will take us through from his expert perspective as our chief analyst and go through a lot about what has been happening. So, Jerry, why don't you kick us off with really what's been happening over the last, since the weekend, I suppose. We're sort of Monday lunchtime-ish now. What's happening?
Well, markets certainly in the Far East Monday morning when we got to our desks were doing pretty well, actually. So certainly the European markets were up again this morning, although they have slipped since then. But I think the news that the surprise candidate, Oracle, has ended up purchasing TikTok's US operations, which is, I think that's sort of bolstered sentiment to a certain extent. And a lot of what had been happening over the past sort of 6, 7, 8 trading days, that concern has sort of started to ebb a little bit. And there's, other risk assets had responded quite positively as well, with lower dollar and dollar-based commodities all a little bit firmer. But yeah.
It's interesting, the TikTok thing, because I think for quite a while Microsoft was the front runner, and all of a sudden then Walmart came in as doing going in with Microsoft, didn't they?
Yeah.
Which sounds really weird, but they'll have their strategic reasons, I'm sure. And let's face it, the size of these companies now, they're all conglomerates and fingers in many pies, aren't they?
I mean, most of the time it's purely down to price, obviously, but for some reason, and the BBC website's got a headline: TikTok rejects Microsoft bid at 11th hour, and it has surprised a few, but I can only assume it's price. But that no one's going to say. But it's certainly ByteDance, the owner in China. Their discussions have been with Microsoft to sell the US operations to, and all of a sudden it's not. But there we go. It's I don't understand a lot about TikTok. I just know it's a video sharing app, but I don't use it, and I suspect you don't either, Adrian.
No, I don't either. No,
that's a surprise.
So, and what about the stock market? It's quite a big disparity. I mean, I'm talking about the FTSE being pretty strong last week, largely down to the pound. We can discuss that in a second. But the US indices sort of pulling back a little bit. So quite a bit of a disparity between them.
Yeah, I mean, the damage was done the previous week to last week, if you know what I mean. So it all happened sort of Thursday, Friday in the previous week. And then last week you had a bit of carryover. Tuesday, NASDAQ completely shanked, pulling down the S&P 500 and the Dow as well. But since then, it's sort of gone sideways. So I think I would say, as I said in our workshop this morning, that the US equities have sort of held their nerve really, following the rout that started the previous week. And I think these tech heavyweights, as we call them now, we can't really call them FANGs because Netflix isn't involved, but Microsoft is, and it's not that easy to say FANGs with an M in it. But it's this massive options play that they refer to SoftBank as the NASDAQ whale. That's WHALE, as it were, as opposed to WAIL. But I think traders are just honestly, they're a bit more wary of what's happening now.
It's a risky situation, isn't it? It's propped up by one buyer. As soon as that buyer decides to close out, you don't really want that. You need a diversification of people that are buying those instruments. I heard today that SoftBank are looking to go private now because they just hate the fact that they had to disclose all this stuff. So when they want to make a big play, they just want to do it behind closed doors and not let anybody know.
Well, there isn't, but it's certainly in the market's interest to know when a company takes a position, a concentration within one particular company, by one particular company in a few US stocks. There are concerns over market manipulation, creating a disorderly market, and all such things like that. So I'm not sure that necessarily will prevent people finding out, but it will make it certainly a lot more opaque. But you're right, they flogged ARM Holdings to Nvidia. That was other news
Yeah.
with SoftBank. So SoftBank very much in the news at the moment. And yeah, there's a move to take it private, but that'll cost a bob or two.
Yeah,
I'd
won't
say.
it just? Yeah. So it's interesting you mentioned Netflix earlier, that apparently they are, this year or next year, they're going to be the biggest spender on content, compared to all the other providers such as Disney, the other places, excluding sport, that is,
Right.
which kind of sort of demonstrates I guess, the success of subscriber services as opposed to advertisers, because someone like ITV, which makes most of its money on advertising, they're probably having a pretty tough time because budgets are going to be squeezed right now.
Well, that's right. The people who advertise on ITV, yeah, their budgets have really been squeezed. If you look at some of the companies, travel, tourism, leisure, just you won't see any of them, or not many. No, you're right. And the sort of subscription model, it's like clubs. I look at some of the, in the hospitality sector, those that actually have consistent revenue through subscription services, a lot of those subscribers haven't cancelled their membership. So those sort of businesses have managed to have definitely had the blow softened by how they're set up. But
Well,
hotels,
subscription revenue is an interesting one, particularly in that kind of thing. I know we had a few school clubs where we thought, actually, no, we'll keep paying for them because, do you know what? If they go out of business, there's no clubs for our kids to go to out of school. So it's almost like a sense of responsibility to keep paying a little bit to keep the businesses going. Whereas if you just pay as you go, you wouldn't do that, would you?
that's right. That's right. Yep.
Interesting. We digress, as we
We do.
always do. But
Mm-hmm.
the FTSE obviously having a massive move up. What was it, about 4% last week, Jerry?
Yeah, 233 points. And you contrast that with the likes of the S&P and the Dow. Dow was down 467. That's about 1.6%. S&P down 2.5%. Nasdaq, not surprisingly, the worst performer with those tech-heavy stocks, really concentrated there. Down 459 points, down 4%. FTSE, you're right, up 4%. And the DAX up 360 points, which is 2.8. So in fact, the FTSE was the sort of outperformer. Well, not surprising when you look at what's happened with sterling. Sterling slumped, 3.6% last week, and it's always the case. In euros and in dollars, UK equities look cheap, and that's what happens. So the currency has that effect. And why do you think the US markets have gone up the way they have done, as well as the Nasdaq whale, i.e. SoftBank? It's also because the dollar's weakened over the past 8 weeks quite significantly, and that's had a big effect on buyer sentiment in the US.
Can we just explain why the pound took a big hit last week, Jerry? Just go through the Brexit issues there.
Yeah. I think really it's, first of all, lack of any progress in the Brexit negotiations. This is for the trade deal that's got to be secured by the end of the year without any delay. It won't be extended. So that's an issue. And I think there's a little more pricing in of it not happening, although a lot of the sort of key thinkers seem to think that it will happen, but it will be limited. And then obviously news that the government's it looks like the government's backtracking on the withdrawal agreement in some aspects, and this internal markets bill will contradict the withdrawal agreement to the extent that it would mean breaking international law, which is the law that governs those agreements, and I think it's just laid bare the risks of no deal, and if the government goes down this route. But you might say, well, why did they sign the withdrawal deal in the first place? But the withdrawal deal had a lot of, things to be agreed at a future date. And I think in these negotiations, the EU has made it clear that they could almost stop the rest of the UK, from selling goods and food, particularly to Northern Ireland. And I think that's just sent out a big red flare. And that's what the government's dealing with now. And I suspect it was the attitude of the EU negotiators that have created this. Whether it gets through, I suspect with an 80 majority, the Tories will probably end up securing it. But it may be that Parliament still have the final say. Anyway, sterling was out on its own last week, falling.
Yeah, I mean, we had some big falls on it across a lot of the pairs. I mean, trading a lot of the accelerator opportunities for one of the strategies here at Trendsignal, and a lot of our students do too. And there were some big falls on the pound. I've got pound Aussie on the chart here, which is one of the big ones. I look at the 6 or 7 sterling pairs that we look at and we trade. Overall, about sort of 3,500 pip fall on those markets, and you can see this one here. So the sell signal, if you're looking on the screen rather than just listening to us, 180.75 or so was the short. Pound Aussie going down to about 550 point fall over 1, 2, 3, 4 days. That's a significant decline, and that was very common against all of them. And Euro Sterling was a huge rally. Not necessarily in pip terms, but obviously it's a much smaller priced instrument, but percentage terms, that was about a 3% rally, maybe a bit more. Huge, really.
Yeah.
So given the stock market, Jerry, the fact that the FTSE tends to respond better to depreciating currency, does that make it a good thing? Is that something that central governments want, is a lower valued or depreciated currency?
Okay, the problem, the only problem can arise if you have a weakening currency is where your goods that you import that are what we call inelastic. So you still you have to buy them no matter what. Their price goes up.
Yeah.
So, for example, the cost of oil in sterling will have gone up because of the move in the dollar, sterling against the dollar. Likewise, a lot of goods that we have to buy from the European Union or from the EU, I should say, and from US and outside of those zones that are priced in dollars, for example, those costs will go up. So you could import inflation, but there is no risk of any inflation. And so there is a sort of a mood amongst governments to, they're not supposed to weaken their currencies for competitive advantage, but it does help the economy.
Yeah.
And let's face it, it hurt the UK economy to a certain extent with sterling rallying back up again. You might say, well, gosh, it's still really weak, but not when it was up at 132, 135 that we got too close on 10 days ago. So
I know last week there was a lot of talk ahead of the ECB statement on Thursday that they really could do with reducing the euro a little bit, because that's been pretty strong over the last few weeks, isn't it, really? By comparison,
but and the reason is that the strong currency it can be a drag on an economy for the reasons we've just been talking about. So it makes the goods from the eurozone in dollars and sterling, Swiss franc and Aussie dollar, and et cetera, more expensive. And if it's more difficult to export, the cost, the production, the amount of production goes down, manufacturing starts to fall away a little bit, and so it has quite negative effects. What they can do, God only knows. I mean, they can't exactly, raise interest rates. That's that's just not on the card. So I think they just have to talk about it, maybe. But the market, I think, will just say, will shrug its shoulders and just say that's what's going to happen. Unfortunately, the dollar will continue to weaken, which means the euro will continue to strengthen.
Yeah. Okay. Any other standout moves over the last few days, Jerry? I mean, certainly gold's pretty dead, isn't it? Let's face it.
It's dead. Yeah, pretty dead. I think it's hemmed in quite a narrow range between 1920, 1970. If we get another big sort of leg down in the dollar or leg up in the euro and the yen against the dollar as well, I think you might see a spike up through the 2000 level again in gold. But for now, it's sort of in quite a constricting range, really, isn't it? So we'll wait for a big dollar move.
I know that certainly oil has been a pretty big mover, for what has been a relatively quiet over the prior few weeks as well, but a massive fall over the last couple of weeks, Jerry. Let me just bring in the chart here for Brent. I know that we had a short trade on crude. When was that? That was a short on the 2nd of September. It's now fallen about $4.70 to current prices. That's over 10% on that one trade since the 2nd of September. So, massive moves that are going on. And overall, it was down about 5-6% last week, wasn't it?
Yeah, that's right. And I think we'd always sort of voiced our concern, the fact that it wasn't making any headway on the upside. And as soon as equities came off, as they did, a week and a half ago, oil was the first to react, immediately selling off quite sharply. And then last week, you had one of the first big builds in US stocks, and this is the end of what we call the US driving season. It's typically when we get to Labor Day, which was last Monday. And I think there is a concern now that with the end of the US driving season and no sign of an end to the pandemic, if anything, it's starting to tick up again, infection rates in the US as well, that demand for oil is not going to pick up again this year and beyond. And so that's the reason why you're seeing oil do what it's done.
Yeah. Well, there we go. Okay, anything else to cover off on, Jerry?
No, that's pretty much it. We've gone through all the sort of major sectors, really.
Yeah, okay. Brilliant. Well, look, there are other events, of course, this week. We've got a couple of live trading events this week that you'd be very welcome to come along to. You should see on screen if you're watching us on YouTube or on our website. You can come along by visiting bit.ly/learnts, or of course, if you're just listening to us on Spotify or SoundCloud or another, then just listen out for the link now. Go to that webpage, register your details, and book in for a free trading event where we'll teach you one of our trading strategies and how you can pick up some great turning points on what is actually an increasingly volatile market again there. So some fantastic opportunities there. bit.ly/learnts. So bit.ly/learnts. And we'll be back a little bit later on today with our second podcast for the day, which is about the main events, economic data and other announcements that will be coming up for the week ahead. So if you are a day trader and you want to know what to be aware of, what's really going to be driving movement this week, then make sure you book in for the Trading Week Ahead's podcast as well, which we'll be covering off on a little bit later on today. Otherwise, have a great week's trading, and hopefully we'll see you again next time. Bye-bye for now.